Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest news that breakdown on GameStop. I'm your host, Dr. Michael LoPiano, and today we are looking at what we've got on this fresh new week, this last week of August, and our second weekly options expiry in the September OPEX period, taking a look at what that might tell us about what we can expect of our price action going into this quarter two earnings report period. And the rest of this September OPEX period. So definitely going to be talking about that today. Stay tuned. In the first instance of our business for today, first order of business for today is that we are going to continue on with our readings from the book of Genesis, thinking about what the language of creation has to tell us about seeing value and how we can think about ourselves in the universe here. Certainly going to take a look in honor of our good friend Richard Newton at a selection of verses from this today. Let's see. Let's get this in a nice configuration. There we go. We can see that very well. Today we're continuing on. We're still in Genesis 1. We're reading verses 14 through 19 here, talking about how the Bible and the book of Genesis, the book of becoming, talk about the ordering of the skies and what this has to say. So let's take a look. And God said, "Let there be lights in the firmament of the heaven to divide the day from the night, and let them be for signs and for seasons and for days and for years. And let them be for lights in the firmament of the heaven to give light upon the earth." And it was so. And God made two lights, the greater light to rule the day, and the lesser light to rule the night. He made the stars also. And God set them in the firmament of the heaven to give light upon the earth, and to rule over the day and over the night, and to divide the light from the darkness. And God saw that it was good. The evening and the morning were the fourth day. So what we have here, right, is a very interesting presentation of what significance, certainly, right, what significance stars and moon, the sun and such have for humankind, certainly here in the order of creation. And the significance that's assigned to them certainly is the measuring and subdivision of time, which we see here, right? So let them be for signs, for seasons, for days, and for years. So this is the idea that day and night, the positioning of the stars is, right? I mean, this is a good way to become aware of this, right? Our sense of time. How we mark time, right? It's not time, but how we measure it, right? Typically, when we refer to days or years or seasons and such, we're not actually referring to time. We're referring to markings of time or subdivisions of time, because it is useful for us to approach time, just as with many things, with this ability to measure. It's not time itself, right? Time itself is created much earlier. Time itself is a product of the first day, but the population of space-time with the instruments by which human beings may go ahead and measure time, the measurement of time itself, right, whether this refers to a physical becoming or a psychological becoming unto human beings, something like that, or unto living things, another question. But in any case, right, the measurement of time is separate from time itself, but it's an important part of the creative order established in Genesis. And of course, right, we think about what this means for human civilization and sort of the idea that to look to the skies is, in essence, to peer into the history of time itself. Right, of course, many of us who have heard of astrology, we think, what a silly science. Who would ever come up with this, right? I mean, it seems natural for us to go like, oh yeah, I did this for a day or a week or something like that, which is some arbitrary apportionment of an arbitrary apportionment of natural phenomena relative to our human existence, right? It's not necessarily arbitrary. It's based in our biology, but arbitrary otherwise, right? We have human-centered understandings of the apportionment of time relative to the skies, this is something that, when carried forward, right, we can say, well, okay, the skies seem to relate to time. Is it possible that one could gain knowledge of the future? Is it possible that one could peer into what is to come if one is able to have a greater understanding of the stars? So, right, and certainly that is true to a certain extent, in the sense that whenever we look at the stars, we are gazing deep into the past, right? Light from stars many millions, perhaps billions of light years away, reaching Earth, gives us a view into the deep, deep past, something like that. So very interesting to contemplate here. Interesting to see our ancestors many thousands of years ago grasp these relationships and attempt to establish a kind of metaphysical sketch of their importance within the order of nature. So very interesting. We'll keep that in mind certainly as we move forward this week with our readings and with thinking about GameStop here and how we can orient ourselves certainly in thinking about time, right? Of course, if we had to pick a series of stars which would give us signs in order to separate the day from the night or be able to mark time with respect to price action, of course, there is perhaps no tool better than well, there's certainly we can use the stars to do that. But right, OPEX periods, very important. And the focal point here of my discussion with, or our discussion today, I think, with respect to GameStop is going to be based in thinking about the data we have with respect to our OPEX periods. Well, not just OPEX, but options expiry as a whole. So we'll dive into this. And as we do, we have a quick stopover in our gratitude section. And so our gratitude once again goes out today to Scott for sponsoring today's video and newsletter and video breakdown, as well as to our monthly supporters, Not Medical Advice, Master Kurt Lusko, Cosmotropic to Swag52, and Hey Lucky's aka Faithless Looter for sponsoring these efforts on a regular basis. Many thanks to everyone who participated in last week's live stream. It was very great. A lot of the topics that I'll be discussing this week, we did have a chance to kind of work through to a greater depth on our live stream on Friday. A live stream is always a great opportunity, of course, for me to sort of field questions and think about how I want to, what we might have coming in the week ahead, and sort of thinking a little bit more extemporaneously, a little bit more stream of consciousness on a number of these topics. So very oftentimes I'll get to the material that I do get to during the week, during the previous week's live stream. That's part of why I always link it down in the description. So if you didn't have a chance to catch last week's live stream and you are interested in getting some deeper insight into maybe what we have coming up, not only in the immediate term, but for some terms farther out, definitely go ahead and check out the recording there. Had a great live stream as always last week. Thank you very much again for everyone for participating. So thinking about what we've got coming up, right? We've been keeping our eye on GameStop, especially in terms of our technicals on the price momentum oscillator. We did talk about this quite a bit on Friday. But right, we're still seeing what I'm seeing here in terms of our values in the PMO. Still looks like we've got quite a few days left, maybe about a week. We're getting close, right? We're getting close to breaking out of this. We're getting close to territory for, what's going to be within a couple days, essentially, kind of triple cross here. So the orange line, which is our 20 PMO, will cross above the white, which is our 35 PMO. No, I have that backwards. Yeah, no, the white is already above. Sorry. White is our 25, orange is our, white is our 20, orange is our 35. White is sitting above the orange, but we're waiting for it to move above the 55, which is our blue line. And then the 0 line as well, right? Once these guys start moving, and then we get the 55 moving up towards the upside, that usually corresponds, as we've seen historically, with some pretty decent moves in terms of price action. So those of us who are certainly waiting to try to figure out when exactly this transition is going to be, and right, independent of your investing style, independent of your trading style, GameStop is a highly cyclical stock. It is a momentum stock. And so understanding these pivot points, right, even if that doesn't mean necessarily timing them perfectly, but understanding these major pivot points throughout our history is incredibly important for being able to get GameStop's price action right and structure trades and points of potentially position building appropriately there. So good to pay attention to this nice little indicator we have from Roaring Kitty. We do have some background stuff that is playing with our price action a little bit. Bitcoin's been on a downswing, testing that 100-day moving average support there. At the same time, we do have a little bit of an improvement in the target rate probabilities, the rate cut probabilities for the 17th of September. Obviously, that's going to continue to be a pretty major factor going into, ahead of earnings, coming out of earnings, and what we could expect going into the end of the September OPEX period. So that's really defining, especially in the background, probably a lot of interest rate swap hedging. And GameStop does seem in no small measure to be affected by this. That has been historically the case, certainly going back to our 3 rate cuts last year. So important to keep an eye on that. Excuse me. We do see IV starting to move up, despite the fact, I mean, this is pretty big, right? This is our biggest move in IV. This is our highest IV value since before the convertible bond offering. That's tremendous. And certainly this is, basically since we're right at the level of the bottom, I should say, of the convertible bond offer. So I guess the day after, right? So if we look here, right? So we get the convertible bond offering, immediately our IV got crushed, following falling earnings, and then we got the convertible bond offering, went super deep. But then, of course, volume went nuts on the day of the offering, so it went very high, and then it came all the way back down again within a few days, and then continued to grind basically for all of July and all of into the bottom of July, and then kind of started to come out in August. We were pretty flat, but now we're finally coming out of that July-August doldrums. And wouldn't you know, the dog days are over, right? Something like that. There really is something to that period, that end of July to end of August period. Of course, August 23rd, end of the dog days of summer. So Roaring Kitty's pretty cool for pointing that out too. But keeping that in mind, right, that is to be certainly anticipated to a certain extent in the 2 weeks leading up to Q2 earnings. So that's not too much of an aberration, but good to sort of see that continue to confirm. Doesn't mean we can't get something of an IV crush today for a day or two. But certainly this would be what we would expect to start to see beginning Tuesday, which is 2 weeks out from earnings. Believe it or not, tomorrow is 2 weeks out from Q2 earnings. So going to be very exciting. But okay, what about this whole OPEX period or weekly options expiry period discussion, and what does that really have to tell us? And what I would say, right, and part of the reason why I look at options data in the way that I do is to gain an idea of how major players are structuring their options positions, how say options dealers are exposed in the weeks to come, and how from week to week, seeing that change week to week can actually give us several weeks heads up on what sorts of outcomes are more or less likely. So one way of doing that is we can look at OI changes. So sometimes when we see sort of very dramatic changes in open interest, this can sort of cue us in to what's to expect, what we can expect based on changes in positioning. So we can pinpoint, let's say, the types of trades that go ahead and reconfigure our option structure. We don't have too much going into this week, but it is interesting and worth paying attention to that we did on a number of call trades have a decent sized ask skew. That's not crazy, and it's certainly not going beyond that 23 to 25 range, but it is worth noting that is a little bit more bullish going into a new options week, going into a new trading week than we have seen in recent history. Mildly, right? I don't want to overstate this. It's a notable difference, but I would not runaway excitement, right, about maybe some volatility to the upside. However, this does go ahead and push our max pain up from 2250, where it sat for the better part, I want to say, the last 3 to 4 weeks, to 23. Again, this is mild, right? This is modest, but this is a small bullish signal, at least in the very short term. That does suggest maybe there is a little bit of upside volatility toward the early part of the week. So that's one thing we can certainly keep our eye on, and we can see how that's going to change throughout the week, right? We could see something like we saw last week where we move into that 23, 24 area, and then, all of a sudden we kind of go flat and trade down into the rest of the week. That's very possible, but certainly from this position right now, relative to how we were looking going into Friday, we are looking at what is likely to be earlier in the week, a bit of price improvement. That's my hunch. That's basically what this tells me at a very low resolution, but I do see a little bit of that. But it's important to understand the boundaries and what that means, right? These are very modest changes, but they are mildly bullish nonetheless. With that being said, I cannot highlight this enough. I will say foremost that from our gamma exposure, looking at how options dealers are exposed to contracts, especially to calls, net call positions on GameStop, this can give us an idea about what are the likely limits to our price action in the coming weeks. So if we look overall, right, we don't see too much change. We still see 23 as a pretty big position. 25 is certainly our deep overhead call wall there across all expiries. 25 is that really key position for us. So any kind of bullishness, I think, has a very low likelihood in the coming weeks to really go too far beyond 25 as things stand right now based on options positioning. This can change. This is why it's important to monitor how options positioning develops over time. But for right now, I don't see anything like that emerging, certainly in excess of 25. Right now, that's an aggregate. That's across all of our expiries. We can go to a little bit more of a microscopic level, not really microscopic, but a little bit more myopic, and take a look at a weekly basis. And what we can see is going into the end of this week. This is something I talked about last week, toward the end of last week, and during last week's live streams. 23 is still the largest net call gamma exposure position going into the end of this week. From this standpoint, from our current standpoint at this point in time, what this tells us is that going into the end of this week, at least as far as now is concerned, the likelihood and the sort of destiny where we're looking to end up is still looking like it's around $23. It looks like we could get a little play in this 23.50, 24 area, but really towards the end of the week, we should be looking at and anticipating something like a settle back down toward 23, and maybe even below that, given the quality of this position and how much accumulated call gex there is at 23. Right, this forms something of a hedging wall. It's very resistant, and it is a position of very high exposure to market makers that incentivizes them to adjust the price or to steer the price via their dynamic hedging to ensure that the price will end up very close to this position. Given the overlap between this and our gex, and we see that $23 mark in our max pain, it seems very likely to me that if nothing substantially changes, by midweek, this is really what we're looking at again this week. Now, for the next 3 weeks, and this is important to notice as well, this changes all of a sudden. 495, as we can see here, that is next week's expiry. For the week after, 9/12, this is the week of earnings, and for 9/19, this is September OPEX. The 23 call wall position, this hedge wall at 23, goes away. We do not have the same positioning that we have seen for the better part of the last month at 23, keeping us basically continually closing at around that strike. That $23 net call gamma exposure hedge wall will go away and is replaced by $25, which is why we see 25 up in our total aggregate gex, at least partially, standing out as much as it does on that particular chart. When this week goes, this very large call gamma exposure position at 23 across our aggregate data is going to shrink. And what we will have is we'll have something of a gradually increasing level with this kind of hedging dead zone here at 24.50. So what that's really going to tell me, what this suggests to me, is that coming out of this week, dealers are positioned to allow for the possibility of a move up into that 23 to 25 range, trading between 23 and 25, with 25 as that upper limit, rather than 23 behaving as this lid on our price action and this very, very resistant level that we kind of ping pong off of repeatedly throughout the week. And if we repeat it, or exceed it, I should say, we get kind of shorted under it in a short period of time. So as I said, going into this week, that is in place. But coming out of the 29th, that's not so much the case. So I think going into earnings, we're likely to see a little bit more price improvement that we've seen recently. Again, I don't see that prior to the actual earnings report itself exceeding $25. But that's basically my outlook for now. I will, of course, as always, keep an eye on what is going on with options positioning, what's going on with our data, to gain some sort of an idea as to whether that's going to be changing dynamically throughout the week, right? Of course, these positions do change. These are modified dynamically throughout the week. High volume can come in for one reason or another and start to really reconfigure this stuff. So, important to keep an eye on this. But right now, right now, assuming kind of ordinary flows on the order of what we've seen over the past couple weeks. Going into this week, I'm still looking from this standpoint, even though we might have some play in the 23-24 area again, settling back down close to $23 by the end of the week. With following weeks having a little bit more overhead room to kind of run around and run up there prior and coming out of earnings. So yeah, that's my standpoint. That's my outlook for not only today but the week. Of course, I'll be taking a look at this day by day. I certainly look forward to seeing you all tomorrow for tomorrow's update, for tomorrow's newsletter discussion, and for all things GameStop. So thanks very much, everyone, for watching and listening. Look forward to seeing you tomorrow, and good luck out there with your trades, and let's go GameStop. Take care.